Once again, ladies and gentlemen, this is the Prince of Investing, Prince Dykes, coming all the way live from the beautiful state of Denver, Colorado, even though I know we're broadcasting right now live in a beautiful state of Honolulu, Hawaii. But as always, don't forget to hit that like, subscribe, comment, share button, and hit the bell icon if you're catching this live on the, in ThinkTech or wherever you may be catching this, or on the YouTube channel, the playback or the podcast. Drop comments. You got comments below. Hit that description box. Check out some other great stuff that we're doing, and to get in contact with me. Also, I think that's about it. But as always, don't forget to hit that like. Don't forget to hit the like, subscribe, comment, and share button. And as always, I don't have a lot of time. And I definitely know you guys and girls don't have a lot of time. We're gonna jump straight into it. So today's show, as you can see, it's going to be about ETFs versus index funds. ETFs versus index funds. ETFs, we're going to talk about what are ETFs. We're going to talk about what are index funds. We're going to talk about how they're similar, how they're different, and how I recommend them as well. Pros and cons of each, all the other great stuff. So sit back and let's have a great show. So the first thing is, what is an ETF? An ETF is an exchange-traded fund. Trades much like a stock, right? It pretty much tracks something. They're hot on the market right now, and the reason why they're hot right now is because they're a passive way of investing versus a mutual fund, which is more of an active way of investing. For prime example, you can purchase an ETF just like it's a stock, and it can track the retail industry, the oil industry, all these other good things like that. Fees are relatively low. It doesn't try to beat the oil industry, anything like that or whatnot. Sometimes they pay dividends, much like a stock, which a mutual fund does too. But they're like the new hot thing. I think it was created by Vanguard, Joe Bogan. I think he introduced the ETF to the market about 20 years ago, if not even longer. But anyway, that's kind of what a quick gist of what an ETF is, right? Now we're going to talk about what is an index fund. Index fund is something that's been made very famous with most investors due to Warren Buffett. We know the greatest investor of our time. He says, hey, purchase an index fund, put your money into it, you'll be good to go. An index fund that tracks the S&P 500. If you follow this show, stock symbol, I think is SWPPX is the one that I recommend. No, I'm not sponsored by them or telling you this or whatever, and it's the best one that I know of right now because it tracks the S&P 500. It has the lowest expense ratios, and it's pretty cheap to get into. I think that one is owned by, I can't think of the company right now coming to the top of my head, but, it's like $40-something for it. You can buy it every single month, and it's a commission-free ETF as well. It's a commission-free index fund, I meant to say. It's a commission-free index fund, meaning that when you buy it, you're not paying a commission on it as long as you keep it for like 90 days. So someone who is purchasing the index fund over and over, following the advice of Warren Buffett and having the dividends reinvested, that's the way you can do it with the index fund. It tracks one of the major indexes, whether it's the S&P 500, NASDAQ, those are the top, the big three dogs. So now we know what an ETF is. Now we know what the index fund is. We're going to compare and contrast them. Now, when you compare them, how they both do the same thing is that both of them just track something. Both of them just tracks the index. Both of them just tracks something, right? Now, with the ETF, for prime example, both of them track. ETF and the index just pretty much tracks, an index fund is tracking an particular index. ETF is tracking a particular sector. Most cases, most times, maybe it does the S&P 500, it does petroleum, it does all different things like that. So that's what they're kind of the same. They're both passively managed. What I mean by passively being managed is that no one is back there trying to beat the market or beat the index, so the turnover ratio is pretty low. Turnover means that usually on a mutual fund, this thing is trying to beat the market or beat something, so it's trading stocks in and out. It's picking stocks, and when you buy and sell stocks, it costs money, right? Transaction fees. So as the turnover ratio increases, so does the expense ratio. So that's something I want you guys to think about, the S&P 500, right? Not the S&P 500, but the turnover ratio and expenses. So both of them are pretty passive, so they kind of track the same. They both track something. They both do it on a passive level. That's where they are the same. Where they are different is, the biggest difference between them is an index fund is Well, yeah, if you get a commission-free index fund, every time you buy it, there's no commission to it. So for prime example, how does TD Ameritrade, E-Trade, Scottrade, how do they make their money? In most cases, they make their money, or the market and stockbrokers make their money when you buy and sell. Transaction. Hey, can you buy me Ford stock? Hey, can you sell Amazon stock? Hey, can you buy me for these? And can you sell these? Can you buy me this every single month? Those are transaction fees. Every time you run across the line, I call it run across the line, those are transaction fees when you buy stocks, when you buy ETF. Now, you can have a commission-free index fund, and you do have commission-free ETFs as well. Let me not caveat that as well, but you do have commission-free ETFs as well, just like you have a commission-free index. And the thing is, if you're indexing and you're buying the same thing over and over, those transaction fees can add up. For prime example, let's say if you bought one ETF every single month. Say the ETF VOO, which is Vanguard's S&P 500 tracker, right? And you buy it every single month. You buy $5 worth, you buy $6 worth, you buy, not $5 worth, every month you buy one share of VOO, VOO. And you do that every single month. That's it. Every time you buy it, it costs you $6 a month, right? And you bought it from E-Trade or TD Ameritrade or whatever. Maybe it may be available on a free app like Robinhood. I'm not sure. But every time you buy this particular thing, and say if you did that 6 times, let's say if you did it for 10 months, right? Or let's say you did it for a whole year. That's 72, if my math is correct, right? Yeah, 72. So you pay $6 every single month, right? Because you just bought the same old ETF over and over that tracks the S&P 500. And you pay $6, $6, $6. Hey, doesn't really matter to me. But in the year, that's $72 that you paid in the fees. The next year, that's $144. You pay any compounds and compounds and compounds because you're just buying it, right? Now, is it good that you're investing that way? Hey, that's good because it's always a good thing that you're investing in the first place. You're investing to the S&P 500, something that has a nice track record. That's always a good thing. But if you go to, if you get a commission-free index, that is, you can pretty much skip over those fees and not pay the $6 a month as long as you hold it for I think it's like 90 days. As long as you don't sell it within 90 days, it's commission free. So you can buy it over and 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 collect no fees along the way, right? So that's what a commission-free index can do for you versus your So for now on, that's a great way to look at things and to do things, right? So that's what an ETF is, and that's what an index is. That's how they kind of look the same. What it kind of differs is when it comes down to a little fee structure a little bit, but granted, there are commission-free ETFs, and there are commission-free index funds, and not all index funds are commission-free. Not all ETFs are, charging. I know VOO, for example, does charge. It's not commission-free. But you may be able to go out there and search a commission-free ETF. And the ETFs, you can purchase and sell them faster, much like you can do a stock. So for me personally, if I'm going for the long-term investor, I'm going to use the SWPPX, I think if I'm saying that right. And that's what I do for myself and my son. I just buy that continuously every single month and forget about it, right? And it tracks and have the dividends reinvested. Now I'm in the S&P 500. That's the best thing on the market that I know of right now. But as I learn and search, do things every day. So, but in long story short, that's what an ETF is. That's what an index fund is. That's how they're kind of the same. That's how they kind of differ, and that's my recommendation on what I do. Because I used to do ETF VOO, VOO, very big time in that, which is pretty good. But VOO has a 0.04 expense ratio, and the index fund that I'm giving you guys has a 0.03 expense ratio. So it's slightly lower. And also, the index fund is commission-free. So every time I buy it every single month for myself and my son, it's commission-free. But every time I buy it every time I purchase the ETF, I have to pay $6 to TD Ameritrade or E-Trade or whoever I buy it from, and the expense ratio is a tad bit higher when they both have the same exact performance and have both the exact same mission. So why am I paying more for it, right? If you get the exact same gas from different places, but across the street it was $5 and somewhere else it was $4, then it's no different. You're probably going to get the one for $4. But that's just me. And if you are purchasing it, that doesn't mean that you're doing bad. Think about it in finance. It's always good, better, and best. So, but anyway, this is going to be a short episode. I want to tell you guys that, give you guys my input on that. As always, I'm going to go ahead and close out the show and say thank you. Check us out on all of our social media platforms. And don't forget to hit the like, subscribe, comment, and share button. Until the next video podcast show that you see us do across the globe. Peace, be safe. I'm out, and thank you.